Hey, it's Ryan from the Option Income Advisor, and today's analysis is going to focus on Facebook. So it reports earnings after the bell today. So if you're seeing this, right now, you should, probably take advantage of the volatility going into earnings. But that said, I think the structure of this trade works. Will still work after the earnings call as well. It's really taking advantage of the volatility that we have, and I think it's probably going to persist even past earnings. Just because we've got this kind of bifurcated outlook, on the stock, right? You still have, I think, some positive earnings momentum. Certainly looking at the consensus estimates of earnings for the company, but then you have this again kind of overarching negativity and uncertainty surrounding some of the regulatory issues that they're facing, and rightly so. I mean, just given the scale that Facebook has gotten to. I think the scrutiny around social media, I think a lot of it is warranted. But again, that doesn't mean it's not an opportunity that we could take advantage of from the option perspective, right? And that's what we're always looking for. Is we're looking for situations with the options, specifically selling the options, where we think that there's a good risk reward with where the stock may trade. Again, in the short term, right? We're looking at the trade we're going to recommend today. Is only 27, 28 days out, so we really care about what happens in that time frame, and so don't kind of lose perspective of that, right? And again, I think there's certainly there's a case to be made that this stock should be held for the long term, and that probably is trading at a pretty good value, and I could certainly make a case for that, but then I could certainly make a case to say this stock is going to continue to have, again, a target on its back from a regulatory standpoint, which could, continue to add to, some of the downside volatility that we've been seeing as of late. So with that kind of backdrop, let's just take a quick look at the stock itself and the profile. So it sold off big last week. Again, this is, mostly driven by, regulatory issues they're having, certainly not on the earnings side, and this could end up affecting earnings, right? And I think that's where the uncertainty comes around, because a big part of their revenue is from advertisements, and if the ad revenue is lower, or businesses aren't paying enough for ads, given the backdrop, it could certainly affect earnings. I don't think we're there necessarily yet. But it's really just looking at the stock and saying, is it a good risk reward at this level? Again, just from an earnings and revenue standpoint, it's got a safety rating of 10. So this is a stock that has historically been very stable, just because of the balance sheet, the cash flow generation, all that stuff. We all know about this. And then from a valuation perspective, we can take a look at that as well. But just kind of keep this in mind as we're looking at this trade. Our strike zone, so the lower end of kind of what we'd be looking for going into earnings here would be 284 to 304. And so looking at the valuation, so we're looking at right around and by the way, the stock is essentially flat today, so as I'm writing this, all this is still relevant for the price today. And so we're looking at a forward multiple right now of around 20 times, which I think is pretty reasonable given the growth trajectory of earnings still in the future for this business. And you can kind of see these charts. I mean, they're very beautiful charts that you'd love to see with any stock. Just this upward trajectory to the right, across annual and quarterly EPS. So again, a situation where you should feel pretty good about the long-term prospects, but we've got this, overarching uncertainty right now. So what do we do, right? If you currently own Facebook, I would say this is a situation where if you wanted to add to your position, we do it through cash secured puts, right? Cash secured puts are a great way to, acquire stock at a lower price. And I think you're getting paid for it right now because of all this uncertainty, and especially with earnings coming up. So let's take a look at the cash secured put first, right? This would be for if you currently own stock, but you want to add to your position, or if you're not in the stock, this is a good way to give yourself a margin of safety given the backdrop of kind of what's going on, with the stock in particular. And so we're still focused on November 19th options, which is the monthly November option. And so we want to look down, and again, this strike zone indicator on our website, as all of you Option Income Advisor, excuse me, the platform subscribers know, we've got this column here that says in the strike zone. So that any of these options that have this green box next to it actually has or actually is in the strike zone. So that's what we're kind of targeting right now. We're targeting something, in the strike zone. And from a base kind of strategy perspective, we're always looking for at least 1% per month. And so I'm looking now at, probably, again, anywhere under this 300, I think is probably a decent trade at this point, going into earnings. And again, it's only, this is as of last Friday, 28 days. So we're talking 25 days really, going into earnings, as well, after the bell. But, both of these, the 295 and the 290, look pretty good to me, from a risk reward standpoint. The 295 gives us 1.4% on an average monthly basis, 9.1% margin of safety, or the 290 at 1.1% with a 10% plus margin of safety. Both of these have deltas under 20. Again, so I like that risk reward a lot. I think this is a great, if you can buy Facebook under 300, I think for the long term, I think you'll be very happy, about that trade, for sure. And so, these are the two that I would focus on as you're writing puts. And again, we can kind of reassess after earnings. If we don't move too much, I think the volatility will stay heightened here. There's certainly a little extra kicker you're getting. So if you can get this in before earnings, I think it would make sense. We could always do a follow-up on that as well. And then again, if you currently own the stock, I think the upside in the short term. So we're talking about the next 20 to 30 days. I think the upside in the short term is probably going to be muted. I can't imagine them saying anything on the call that's going to cause this stock to move up, $20, $30. I just don't think we're there, with this stock mentally. I think if anything, if it reports decent earnings and they're able to mute the uncertainty a little bit, the stock's probably going to trade flat, or maybe slightly higher. But I don't see a scenario where this thing just goes through the roof. And so if you currently own the stock, covered call is a great way to take advantage of this volatility, right? So you've got heightened volatility again from the increased regulatory uncertainty, but then you also have additional volatility spike from the earnings call as well. So let's take a look at a few of these. And I think anything kind of up in the 350 range. So again, we're trading right around 325. So the 350 to 355 range is $25 to $30 of upside. So almost 10% of upside from the current levels. And so that's kind of where I would focus my energy. Not the 12th. Let's scroll down to the 19th. There we go. So the 19th, I would focus again on the kind of that 350 level. And what we're looking at specifically on the covered calls are how much can we earn on an average monthly basis, but then also how much is our upside profit. So upside profit takes into account the increase in share price over the current price. So, for example, on this 350, we've got about a $25 upside in the stock itself. And then we're going to be collecting, almost $5 of premium. So it takes into account both of those. The premium that we're going to collect, which we get to collect no matter what, even if we sell it through the covered call at $350. So really about $30 of upside for that, because we'd end up our cost or our actual selling price would be, the $350 plus this $473 that we're going to get. So that would equate to about a 9.3% upside profit. So again, if you can get basically 10% of upside in the next, 20 to 30 days. I think that's a phenomenal trade, right? I don't think it's going to get there. And so this is where, you're collecting this average monthly yield of 1.6%. So it's a stock you already own. This is a way to give yourself, again, about a $5 cushion on the stock. So it kind of helps mitigate some of that downside if we do have some volatility to the downside after earnings. This option, this call option would give you an extra $5 of kind of cushion there. But again, it does give you $25 of upside if we did trade a little bit higher. So I really like the risk reward of kind of both the 350 and the 355 because we're getting over 1% just for kind of taking advantage of this volatility. But both these give us a about a 10% upside. So I think either one of these would be a great trade if you currently own the stock. And there's nothing wrong with doing both, right? If you currently own the stock and you say, hey, I'd love to buy some more at a lower price. I'd love to buy it below 300. Great. You can sell the cash secured put, increase your position size, acquire stock at a lower price, and sell the covered call on your current shares, right? So you can kind of catch both ends of this volatility from the option perspective, and I think that makes a lot of sense. Again, certainly for what we're looking at with this stock. So that's our trade. Again, this is kind of almost backing into kind of a triple play, where you can write the cash secured put and also write the covered call. But I love the volatility here. I think there is, some upside with this stock, but I do think that this regulatory stuff is here to stay. It just, with the scale that Facebook's at right now, I think with all the people it touches through the social media platforms that they own, again, mainly the Facebook app and Instagram, they have so much scale, but I think we have to make it as safe as possible, obviously, as well, and I think that's where a lot of these regulations are coming through and the scrutiny is coming through. So that's where we're at. I love this stock kind of, again, between that kind of 300, or if it dips a little bit lower, up to the 350 range. And I think it's a great play going into earnings. So that's our trade for Facebook. Any questions, let us know. Take care.